You're welcome back. Still watching Business Incorporated on Channels Television. We head to the markets now, and I thank God I'm not wearing red. But from the corner of my eye, I do see red. This is not me. Will Ibong, Mr. Bismarck Rwani, I'm not wearing red, but there's red.
This is not on me. This is not on me.
I want it to be on record.
Well, you got a touch of... Okay, it's pink. I was going to
Thank God you have glasses on.
I was going to attribute
something
this
to clean it so you can. So I'm out of this.
You're out of this. But yesterday we closed in the green. So we saw that rebound from the negative close we had on Monday. But the market has not been able to sustain that. We've seen this negative,
I think the name of the game now is profit taking.
It's profit
It doesn't
taking.
matter how small, because you see stocks that lost the day before and continuous profit taking on them, and you wonder, are you sure you're making profits when you're selling off at this time?
It's understandable. Our analysts have mentioned that the month of August is, historically has been the lowest month when
sell
you
and go.
Yes, a lot of sell, and a lot of people. I guess I had on Saturday mentioned about school fees. People have obligations. Yeah, a lot of people are taking money, especially holidays right now. People want to travel, so they're selling off, and going for a holiday. So it's time to cash in, from the profits that they've made in their stock market.
Great.
So let's check in on the major stocks in Africa. We talked about Nigeria's. At intraday, mostly negative sentiments were seen. Nigeria's NGX was down. The index, as we mentioned, was not sustaining the positive close we had on Tuesday. Profit taking, no doubt, but we see South Africa's JSE at intraday, up 0.4%. Also, EGX 30 was struggling to stay out of the red zone at intraday. Marginal downtick. Meanwhile, the EGX has approved the listing of Export Development Bank's $50 million capital raise. Now, let's see Kenya's close for yesterday. That's Tuesday. It closed in the positive 0.64%. Now, it's rebounding from that Monday's negative performance. And let's swing quickly into the fixed income space and get a sense of what's happening there. Chuka Nwachukwu is the group head, Asset and Liability Management, is joining us. Good afternoon, Chuka. Very quickly, let's get your opinion. The federal government's $500 million bond is ongoing. We have 10 days before the offer closes. Tell us what the turnout has been like so far since they opened on Monday.
Good afternoon, Will. The federal government dollar-denominated bond is the first of its kind. It's in series of 500 million at a yield of 9.75. Participation has been quite good, quite encouraging, especially with the Nigerian diaspora Nigerians. They've seen this as an opportunity to invest in Nigeria market, especially as regard the dollar-denominated instruments. That will also give them a bit of comfort in terms of if they need to move these funds out. So for now, we have up to 30th for the bid to end. But so far so good. It's quite encouraging. Participation is highly encouraging.
Okay, so let's look at the bond offer for August. The bond auction we had on Monday, the offer was 190 billion compared to 300 billion the offer we had in July. What factors do you think influenced the DMO's decision to scale back, from the previous month's offer?
Well, I think if you watch the borrow plan for the DMO, they have a specific threshold they need to meet, especially as regards the local market, and in this case, the bond market. So you've seen the offer reduced, like you mentioned, from 300 billion to 190 billion. But however, well over 374 billion was sold, so obviously it was oversubscribed. The 2033, which is a longer end as regard the offer, as regard what was offered, had a lot of suspicion. The major attraction was on that security due to the fact that investors and then traders have gone short, and then of course they are looking to cover aggressively in the market, and primary market is actually the ideal place to cover profitably. And so for me, the interesting part of it was the fact that we saw yield drop by 46 basis points. The last auction result came out 1 year the longer end, which is 2033, came out at 21.98. We saw about 46 basis point drop to 21.5. So this has actually affected traders. Like I said earlier, people who had gone short, we obviously need to cover from the primary market, and that would be probably quite expensive in terms of covering their position.
Okay, but let's just move away from there and look at the auction that's taking place today, where about 409 billion naira is on offer, the Treasury bills auction. Can you just say that this is even coming shortly? We just had the inflation numbers. We saw that slowed down the first in 19 months. And we're also expecting the MPC meeting in September. What do you think will be the expected outcome for this, seeing that, yields are dropping in the bond space? What do you think investors will be doing for the NTB auction?
Yeah, like you rightly mentioned, we have about 409 billion on offer. Like I said earlier, we've gradually seen yield, drop. This is because, elevated yield above 21%, 22%, it's quite expensive. DMO obviously will not be able to cope in terms of repayment. And so strategically, the government is beginning to drive down the yield. This auction, like I said earlier, we are expecting that it will probably drop around between 35 to 50 basis points. For me, those areas are, those levels are also very good levels. I do not think that the DMO will increase the yield, the rates at this auction. I think that it will hover, like I said, within that 40, 50 basis point drop, especially at the 1 year, which is the longer end.
Thank you so much, Chukanwa Chuku, Group Head, Asset and Liability Management at UBA. Thanks for sharing your perspective on Business Incorporated.
Thank you.
So let's look at other markets now. We look at the Gulf, that's the Middle East, where mixed sentiments were seen at intraday. Abu Dhabi was down 0.07%. Dubai, on the flip side, was up 0.27%. Still within the region, Saudi and Qatari indexes traded in opposite directions. We see Saudi up 0.6%, while the Qatari index traded down 0.39%. And there are also reports of Saudi and China yuan-based oil trade facing some tough challenges ahead in terms of scalability. Now let's check out U.S. now. In early trade, stock futures are inching up on Wednesday as traders gear up for the release of the Federal Reserve's latest policy meeting minutes. Everyone's eager to see if there's any clues about a possible interest rate cut. As of now, the Dow Jones futures was up 0.14%. S&P 500 futures also rose 0.12%, and the Nasdaq futures slightly up by 0.09%. And this comes after a bit of a rough patch in the markets. Both the S&P 500 and Nasdaq Composite ended their winning streaks. But let's get more from yesterday's performance with our correspondent, Maria Bird.
The U.S. stock market took a bit of a dip on Tuesday as the Dow Jones was down at 0.2%. The S&P 500 was also down at 0.2%, and the heavy tech Nasdaq was down at 0.3%. It is clear that investors are watching to see what will happen between Chairman Powell and the banks, as the meeting planned at the Jackson Hole is one that has great expectations, as there could be insights into the interest rates, whether or not the U.S. will see a decrease in interest rates over the next few months. This will be one that investors will be seeking to see as the U.S. economy continues to remain pretty strong, but the U.S. stock market seems to have taken a bit of a dip over the past few days.
Thank you, Maria. Thank you, Maria, for that. All eyes now on the Fed meeting and the minutes they're going to churn out, and to see what's next for interest rates in the U.S. Now, let's look at Asia, where most markets were mostly red. Wednesday, the closed red following a pause in the U.S. market's winning streak. Japan's Nikkei 225 slipped 0.29%, dropping down to 37,000 points there. The Kospi in South Korea up on the flip side, 0.17%. And latest trade data showed, that's in Japan, showed that we saw a 10.3% rise in exports and a 16.6% increase in imports for July. And it's also worth knowing that this data comes just before Japan's recent interest rate hike, which has strengthened the yen. In other markets, we see the Hang Seng in In China, we see that also up at intraday. I'll see Shanghai markets, that's in China, down at intraday. I mean, to close the market, 0.35%. And the S&P ASX in Australia up 0.16%. And this is also adding up to, the markets closed past the 8,000 points. We saw it dropping yesterday at 7,000 points, but this is the first time the market is going to be crossing this 8,000 mark since the market turbulence we saw last week, earlier this month, actually. So a lot of things are happening in terms of inflation and rate cuts right now. We see South Africa's inflation rate dropping to 4.6%. That's from 5.1 that they saw in June. So Nigeria's inflation is also dropping. So I think it's a season of rate drop, interest rate drop.
I think
inflation drop rather.
I think you should have a cautious optimism, because we know the drivers of that drop of inflation was seasonal. The waiver that the federal government has started, which ends in December, the harvest season, these are they're fed into that drop in inflation. So let's just manage this excitement so that we don't have a broken heart.
Okay.
When the reality comes knocking again.
I'll just keep my fingers crossed and hope that the drop continues.
Best. Thank you so much, Will. Let's head to London now, where British holidaymakers face a